Good afternoon. My name is Isabel Margarita Bravo, Director at Inbest ChileDay. We will now turn our attention to a subject that is fundamental for any investment decision, the tax framework. And we'll have now a panel on rebuilding tax competitiveness. Chile is in the middle of an important debate on tax policy. The country is seeking to balance fiscal sustainability and at the same time, the need to remain competitive as a destination for productive investment. For long-term international investors, particularly those allocating long-term capital to Chilean mining, energy, and infrastructure, understanding where Chile stands on taxation and where it is heading is essential. This is a particularly relevant conversation here in Toronto. Many of the institutions in this room invest in Chile through structures that are directly affected by our tax framework. And the predictability and stability of that framework has long been one of the anchors of the Chile-Canada investment relationship. Our panel today will bring leading voices in Chilean tax policy who will share their perspectives on where the Chilean tax framework stands today and what international investors should be paying attention going forward. Please welcome our panelists, Mr. Alex Fischer, partner at Fischer y Cía, Mrs. Astrid Schudeck, partner at PwC in Chile, Mr. Nicolás Brancoli, partner at EY, and Mrs. Theresa Murakami, VP of Tax and Treasury at Lundin Mining. Please join me in a warm applause to our panelists.
Thank you, Isabel. Thank you, everyone. Taxes, and I know you all love taxes. I can see the excitement. But it's a matter that is very important now. We have a great panel with tax specialists here. Now, quickly introduce our dear colleagues here. I'll start with the ladies. Astrid. Astrid is a tax specialist from PricewaterhouseCoopers, and she has a vast experience in all tax matters and a strong tax policy view. So thank you, Ingrid, for being here. Theresa, VP of Tax from Lundin, a company that has strong roots and interest in Chile. So she brings the real economy perspective to this discussion, the day-to-day of a huge multinational that has a strong interest, again, in our country. And finally, not least, Alex Fischer from Fischer y Cía. He's a very well-known lawyer, an authorized voice, I would say, in tax matters. So thank you, Alex, for being here. Just a quick note as an introduction. Every client or future investor that approaches is asking the same thing, right? Is what to expect, when, and what impact should have this reform. And the idea is actually cover those topics, right? To what to expect. And as you know, and as you are aware, we have been having for the last decade many tax reforms. So the key question here is what to expect in this specific reform, and what difference should we make in this discussion to make the most out of it, to make the most out of this new process that we're foreseeing. We're going to start with the investor lens, then going to the design questions, and to finish with some big picture questions to our dear panelists. So I'll start with you, Theresa, if you don't mind. And from the perspective of a big company such as yours, what difference does it make the corporate tax rate reduction that is being proposed as opposed to other measures, for example, red tape, timelines, energy costs, and so on? What do you think about that?
First, thanks for inviting me to the panel. I feel honored to be with the colleagues here. I guess as an investor, as a tax professional, I want to say that tax is really important. when it comes to capital allocation. But first it has to pass, I guess, the investability screening. So for example, and I think we've been hearing a lot about it, the past 2 days about permitting timelines, political certainty, legal and litigation risk, infrastructure, as well as commodity prices. And so I think once the project clears that hurdle, I think that's when tax really becomes important, and it's important in 3 ways. And because after tax it's the cash, it's the project net present value and return on investments, and where it really matters, like with the tax rate, is for projects that are borderline in the hurdle rate, where the assets or the project might be at a very high cost, or very high cost, or the or when it's the low grade, for example, tax maybe a few percentages can make a big difference. When the first, like the mining royalty was introduced back in 2021 and 2022, the first proposals actually made some of the projects uneconomic. And so that's where tax rates would matter. Another way it matters is the competitiveness. When you're trying to allocate capital between across multiple jurisdictions, and if you have comparable jurisdiction, then the tax rates will matter, because and as you know, the countries are very competitively bidding on foreign investments to Chile, as well. Like countries like Argentina, for example, it's becoming very competitive, and I think that's where tax rates can matter as well. And I think thirdly, it's the invariability. I think the investors want to know that tax rates are not going to change. Mining projects are long-term projects, and so investors don't want tax rates or tax rules to change in the middle of your investment. And so I think that's what investors are, or that's what investors need in terms of tax reform, is that the tax invariability over the life of the project.
Perfect, thank you, Theresa. And Astrid, going to your knowledge and experience regarding foreign investments, do you think that this reform makes a difference from the perspective of foreign investors? What do you typically see as key features or key points that they ask when deciding whether or not to invest in the country?
Okay, first of all, thank you for inviting me. I think it's very good to have tax advisors or tax experts in the panel, because we are going to, if you are going to speak about the reconstruction project, that is basically or mainly a tax reform, I think we should be here. Yeah. So I think this tax reform or tax reconstruction project, it's a combination of good measures. I think we need to speak about this project taking into account all the ideas and the measures that are going to implement, not just one, okay? Why? Because the corporate tax rate cut is, well, a good measure, okay, regarding what Theresa was explaining to us, that when you look at a project that has a long-term investment, okay, the fact that you have a corporate tax rate that is competitive compared with other countries, of course, and you want to reinvest, obtain more cash and reinvest the cash, this is a good incentive, okay, in terms of net present value of your investment, okay? Why it is important to say that? Because it's also important to say that in Chile the effective tax rate, the ETR, is really 35% for treaty countries. That is high, of course, but in case of non-treaty countries is 44.45. That is very high, okay? So this project is also reintegrating the system in order to put all the foreign investors in the 35 tax rate, okay? That is something that we were waiting for many years,
fair, right?
And from the last tax reform, we expected to have this,
for sure,
this equal treatment, okay? And that, well, in the case of treaty country, we have 38 treaties signed, hopefully more that are being negotiated, okay? You know that those foreign investors have a kind of implicit invariability of that tax rate, because if Chile increases the tax rate, we need to negotiate all the treaties again, these 38, most of them at least. But for non-treaty countries to get invariability, and that is very important, okay? Because if you increase the effective tax rate, that would impact directly and mainly the non-treaty countries, foreign investors coming from those countries. Well, so that's the invariability. And in the case of mining investor, to get invariability of the royalty tax is a very good measure. Hopefully that could be approved, okay? Because it's an extra, an additional tax obligation that could be high, okay? I think foreign investors in general are willing to pay taxes in Chile if you have certainty, okay? This is sometimes when you discuss this with foreign investors more valuable, that maybe they are willing to pay more, but if you have certainty, okay, and you basically assure that the rules are not going to change, in addition to other, of course, measures to have a not change of criterion from the tax authority, you know, not tax reform each 2 years or 3 years. That is important for foreign investors.
Perfect. Thank you, Astrid. And dear Alex, what do you think, what is your opinion from a tax design perspective of this reform? What features do you think are critical to attract investment from your point of view?
Okay, so I think this is overall a very good reform, and it's on the right track. We're reducing the corporate tax rate, and I think that, well, creating stability on taxes for 25 years for investors. So I think that overall this is an excellent reform. Okay. I think that it's a reform that has focused on the big picture. So if you ask me what would be in my wish list, there's a lot of small details in the way taxes are administered, in the way, you know, certain definitions. There's a lot of little details that are not addressed by this reform, and there probably should be another reform to address all those small items that in the end are also relevant. But this is not the focus today. This is like a big reform that it's major topics, and it's the reduction of the corporate income tax rate and the reintegration of the system and stability for foreign investors.
But do you think we need to solve those details in order to be effective?
I think we need to, but I also understand that as a political matter, the concept is to go with the big things first, you know, get this done quickly, and then try to address perhaps all the other details. Now, if you ask me what is missing from the bill, I think there's one big thing that is missing from this bill that has to do with capital gains tax, because the bill sort of has something with respect to capital gains, but limited to stocks that are traded in a stock exchange. So they're exempting capital gains on stocks that are traded in a stock exchange. But it's doing nothing with respect to capital gains for investors in, you know, privately held companies, investment funds, etc. The rules are not modified, and today Chile has a very high rate on capital gains. Basically, capital gains are treated as ordinary income, which means that if you're a corporation, you end up paying 35%. If you have treaty, 44.45%. If you don't have a treaty, that's very high for capital gains. And if you're an individual, it's 44.5, the maximum rate. So it's a very high capital rate, and this is really an anomaly if you look at OECD jurisdictions. Like, I was preparing for this panel, and in Canada, for instance, you have a 50% reduction on the income that is included for capital gains tax purposes. Chile doesn't have that. If you look to the US, they also have a special rate for capital gains tax. And then I tried to look for other countries like Germany, Finland, Portugal. They all have participation exemption, which means that at the corporate level, they mostly exempt capital gains. And then for individuals, they always have a reduction that ranges from 40% of the income to 50% of the income, more or less. So this is really an anomaly in Chile that we don't have a capital gains tax with a reduced rate. And I think that when you look at the overall picture and try to see where do we find things that are missing from this bill that are necessary to encourage investment, I think that the capital gains tax is a big problem. And now I'll add also that on capital gains, and this is my wish list. So, but if I could ask, there's also a problem with all the passive income. There's a lot of money that Chileans got out of Chile in the last couple of years. You know, if you look at central bank figures, you know, there's like $22 billion of foreign outflows by households and non-financial firms. This is like triple the amount of outflows of money that happened before 2019. And all that money is trapped in a capital gains tax system that if you want to redeploy that capital and bring it to new investments, you basically have to pay a 40% tax. So again, I think that if we want to encourage investment in Chile, rebuild that muscle, we have to do something with respect to the capital gains tax, also on passive investments, so that, you know, people can realize those gains and reallocate that capital in the most efficient way, and hopefully that would include some investments in Chile.
And do you think that the transitional measures that are considered that are trying to get that money to Chile again, do you think that they could be effective, or?
There is something there. I mean, it sort of includes the ability to try to pay a tax, a 10% tax, or 7, depends. Yeah. But to try to bring that money, but it's a one-time thing. Yeah. And the reality is that there is having a 40% capital gains tax for passive investments. Basically, it's crazy. I mean, once you get locked in very quickly on those investments, and it becomes very harmful to try to reallocate capital. And you know, if we want to have a system that is more neutral in terms of capital allocation, we need to think about these things. And again, you will run into the problem that this is benefiting the rich and everything else, but the reality is that these taxes don't collect anything. I mean, if you have a 40% tax and you're invested in the S&P 500, you're never going to sell. I mean, you're not finding any other investment. Yeah, for sure. If you have to pay 40%, you're not finding any other investment that is better than that, than keeping the investment. So we have to look at that.
Yeah, if we are taking this opportunity to make proposals. Okay.
Yes.
Well, no, one is, well, you know that our first treaty was with Canada, but Canada treaty is very old. So, for example, capital gain is not addressed very well and has no tax relief opportunity. That happens also with Mexico and with Peru, that are the first treaties. So I think we need to maybe look at them and try to update those treaties, and in order to be aligned with the newest one, okay? And that in respect capital gain, I think it's a good idea that you propose. And the other is that this 7%, this is a sole tax basically of 10% or 7% if you repatriate the money into Chile. It's a very good incentive, but I think you should consider also, or compare this situation with the fact that we can use the tax credits pay abroad. So in order to see the real effect of that, you need to run numbers. Okay, because sometimes you include a benefit that basically in practice is not useful. So we hope that this would be considered in the analysis, okay, or basic, I think maybe it's a case-by-case analysis, that if this is approved, companies should see, okay, what is more convenient? This 7% is real an incentive for us, or we use the credit considering also, well, the reduction of the corporate tax rate. That would be, I don't know if we'll coincide, I think not, because the reduction of the corporate tax rate is progressive. It's not immediately 23, okay?
Thank you. Theresa.
If I can say something, because Astrid, you were mentioning about the treaty, and you know, I think the theme of yesterday, today, where how investors allocate capital what they require is reliability, predictability, right? Reliability, predictability. And what we're finding now is that there's an increasing uncertainty how the tax treaties are being interpreted and applied in practice. And especially for treaty benefits that are being challenged or denied based on how the structuring was done. And right now we have a case with, we have a tax dispute with the Chilean IRS on tax interpretation. And so, and it's not really an isolated case on our part. We're hearing that this is becoming increasingly common across across industries where the interpretation is are kind of questionable for structures that were historically would have been commercially standard, but now they're being challenged. And so it's not about anti-abuse rules, like that's given, but it's really what this goes to show is that there is the investors are relying on good faith application of tax treaties, but if they're not doing that, then it would be like it's creating uncertainty for cross-border investments. And I think that as an investor, we would be considering that as a risk to any investments that are being made in Chile if we cannot rely on tax treaties being respected.
That's a very good point, because we have heard since yesterday that stability is key, right?
Yes.
We heard also from the VP of Commerce of Canada that investors are willing to pay premiums in order to have that stability. So what's the role of the tax authorities in all of this? I mean, it makes sense that we are granting legal stability, but we have maybe an authority that is not fully on board. I mean, what do you think, maybe Alex, on this point?
Yes, I think when I just spoke, I said there were a lot of little measures that had to be enacted, and I think a lot of that has to do with the tax authority. I think, sadly, the tax authority doesn't really have a view of how it impacts the perception of risk that foreign investors end up having with respect to Chile. So in the last years, it's been common for tax authorities to issue very large assessments that are thinly backed by law, or that are very novel interpretations, or that are misguided, and they have some form of way to evaluate the tax administration that encourages these very large tax assessments. So that's, for example, one area where there should be a lot of detailed analysis of what are the incentives of the tax administrators. But I think the tax authority as a whole lost perspective on the impact that it was having on the perception of risk about Chile. And I've had to explain tax assessment to Canadian investors, US investors, and it's very difficult because this is a huge tax assessment with very little basis, and how can this happen? And there's very little control and very little acknowledgement that this is a problem. And I think the new administration is also trying to change this. This is very hard to change because it's really in the backbone of the individual tax auditor sitting in the desk reviewing your taxes. And it's a very difficult thing to address, but I think it's very important to try to tackle that as well.
Yeah, I agree with Alex. And I want to take one important thing you mentioned, that is good faith. That is important. No? You should assume that taxpayer and foreign investor are acting in good faith. If you, because of reputation, and in general, foreign investor wants to finance company when you have big projects, you expect that all the rules or all the interpretation are respected, and that the position of the tax authority is that foreign investor is in good faith, okay? Otherwise, you increase the risk of the country, okay? So that is the reason why it's important that the changes are not changed suddenly, okay? But what happens is that when you have something that is being applied on the market, okay, and suddenly you basically discover that now Chilean IRS or well the tax authorities challenging this, you increase the risk of the country, for sure, for sure.
Theresa, let me take you to the mining sector with your deep expertise on this. What's the view of these companies on the tax reform? What are they waiting for and expecting?
Can you repeat that question?
Yeah, from the mining sector, what do you think is the key factors that they are seeing and expecting from this reform?
This reform. Okay, so I think the good part is that it's not just a tax reform, but it's also including, permitting timelines and other regulatory framework. So I think that's a good thing, because tax reform by itself is not going to, create a mine, right? So I think permitting timelines must be shortened,
okay,
in practice and not just, in writing. So I think the mining investors will be looking to see that there's evidence of this, right? At the same time, there's also the tax invariability. I think that is also a good thing for any new investments. It's, again, predictability of like knowing how much you're going to pay tax for the next 20, 30 years is really important. So I think that's also something that we're looking forward to. And as well, the legal risks also need to be considered, because I think for a mining company, it's still, expropriation risk and all that is real, right? So to see that that's being somehow incorporated into the reform, I think it's the, I think that's also important. And at the same time, I guess, we are, the projects, it still needs to clear the commercial hurdle as well. And so that's where like the infrastructure costs and all that will play into it. And so if the reform addresses infrastructure, I think that's what it's also doing. So I think all those like four things I think would be something that we'd be, as a mining investor, would be looking into, yeah.
Astrid, let's go a little more technical, just a little. I know repatriation strategies, tax treaty application is important, but what technical points do you think that should be covered in this reform in order to be effective and to boost the economy and increase the tax revenue? That is basically the objectives that are there.
Well, I think I don't. My question is why, for example, the reintegration is implemented gradually. I think it's something that we are waiting for so long, and I expected to have this an immediate application. Okay, that is something more. Okay, sorry. No.
Can you use this?
Okay. Can I use this? Well, it's okay?
Yeah.
Yes.
Okay, thank you. Well, one of the things that maybe can be improved, okay, and the other one is to have maybe how you assure that when there is a change of government, don't increase again the corporate tax rate. If there is something to maybe include that in the variability, because the variability is covering the ETR basically. Okay, the effective tax rate is the one that is going to be preserved, but not the corporate tax rate. So I think it would be a good idea maybe to see, well, you know that we have constitutional issues to analyze, of course, but to have something that assures stability also of the tax measures that are implemented by the Chilean tax government, and not to expect that each time that Chilean government is going to change, whatever is the side, again, we have a tax reform. It's good for tax advisor, of course. I love tax reform, okay? But I love also that the foreign investment increases. It's good for us, for the country, okay?
Right.
So,
Let's go a bit in the transitional measures. The heart of this reform might be its transitional measures, right? Because basically what is trying to do this reform is to boost the economy and also increase tax revenue. So what do you think, and this is an open question, so feel free to jump in, what do you think of these measures should be the most effective and should be maybe non-negotiable or should not be compromising the discussion in Congress? What do you think?
This is a question for me.
For everyone, so please.
No, I think well, we need to see the real effect of the substitute tax, that it would be the third or fourth time to be implemented, I think. And well, there is still companies that has the opportunity to subject to final taxation with a reduced tax rate that is 10% with no credit. So it's something to analyze. Again, when you are speaking about this transitional measure, you need to analyze in a case-by-case analysis, because the last time when we have the 12, it would not, in practice, it would not be useful for all companies, depending on your specific tax situation, okay? But that is, of course, a good measure to incentivize the advance payment, okay, with a reduced rate. No credits, but there are some companies that may use this benefit. I think it's a good idea to just extinguish all profits, okay, and begin with the new ones, basically.
Alex, Theresa, I don't know if you want to add something? Or?
Yeah, I want to answer the part that you asked, what should be non-negotiable. I think that of all the measures that are tax related, I think that the tax stability is by far the most important measure. I mean, we can discuss the corporate income tax rate, we can discuss, you know, some revenue measures, but in the end, what investors really need is that tax stability. I've been very surprised because there has been like a negative reaction in the opposition parties to this tax stability, and it's strange because we've had that in the past, very similar for a long period of time. Now they're saying there should be constitutional challenges, but we had that for so many years and nobody ever made a constitutional challenge on that. So to me, by far, tax stability is the one that should be non-negotiable because it's probably the cheapest of all the measures in terms of revenue, and it's the most effective by far.
And right now the tax rates are not low, so they're not really you're not really locking into a lower rate that the tax or the government will want to increase later. I mean, the mining royalty is quite high. When I look at our effective tax rate, if we include dividend withholding tax, you know, on the after all the money's been distributed, it's over 50% of our EBITDA. So if you're locking, I think by giving invariability, stability right now, I don't think the government's really losing out.
Yeah, and also you have to take into account that the mining tax has this structure where you basically have a higher rate if profitability increases.
Exactly.
So if the prices of copper keep going up, you know, you're stabilizing a rate that varies with the increase of copper price, basically. So in essence, it's not that it's invariable. And it will adjust. So because in the past what happened is that you had certain assumptions of what the copper price was going to be, and based on that you gave stability, and then the copper price went to the roof. Now this new tax incorporates that situation. So I think granting stability today is not the same as what it used to be.
Yeah, exactly.
No, and it's more, well, I just recall when we have the invariability for the specific mining tax, and you can see that we have a high tax effective rate, that effective tax rate, but sometimes when I saw discussing with foreign investors, they are willing to pay even this high tax if you
depending
have a stability.
On commodity price. Depending on commodity prices.
For
right?
mining, yeah. But if you have a stability, that is a good decision.
Yeah, definitely. Because I think what would be worrisome to an investor is what happened in 2021, 2022, when the mining royalty was first introduced, and when they were introducing these mining royalty rates that were just crazy, And just like some of the projects, like I said before, like would make some of the projects uneconomical. So if you invested billions of dollars into a new project without the invariability, and that that tax rate or the tax regime was introduced and implemented, I think that would have been real disaster for mining investments.
Let me ask another open question, so please free to jump in, any of you. Simplification is something that used to be an item on the past reforms. I don't know if any of you have seen a tax registry, but it's a nightmare of registry over registry. So we have a complex system, right? We know that taxes in general are not easy. The US, even Canada has its complexities, but in Chile we have a complex system, and it's not a manageable compliance, and it should be, right? So what do you think of this tax reform, this bill, in that regard? It's solving anything, or is something that was completely forgotten? What do you think?
I don't see much in the project in terms of simplification. Now, you wonder if it's part of the territory. I mean, taxes are complex. I mean, I don't know. I mean, of course, there's a lot that could be done, but this is, again, this project is not addressing the nitty-gritty. I think it's really going to the basics, trying
it's
to
pragmatic,
fix.
Right?
It's very pragmatic. We want to do something in a very short time frame. We will have time later to discuss all the nuances, but now, focus on the big things, and that's the way it's addressed. I don't think they're taking much on simplicity. Have you seen?
Yeah, no, I haven't seen either. So, but I think you have a good point, Nicolás, that simplicity is good because when you have a complex tax system, you incentivize dilution, basically, okay? Because you have some gaps that you can use, and the idea is to have a simple system. The integration is complex to explain to foreign investor. Our Chilean clause in the treaties, why you have this, and to explain that, well, that really our tax is 35 and not 27, so that's the reason. And sometimes it's difficult to explain, okay? But it's difficult to change the integration system. So it's something that maybe we can expect in 10 years more, we don't know. It was an attempt to do it, and it was not approved, okay? Because we have a culture that we are accustomed to what we have in terms of tax, but it's complex, and you are right.
I think simplification is really important for investors because you want to be able to model out your cash flows, over the life of mine. But if you have like the partial integrations, it's really hard to model out. And so I think it's really good to see that the direction that they're trying to do is to reintroduce the fully integrated system. I think that's a good thing.
I know this is not a new question. I have heard it before, but Theresa, if you were to choose tax rate reduction or stability, what do you think would be your response?
I think it goes without saying. I think it's stability. I think that's been like the key message. I think for the last couple of days is predictability, stability, reliability. So I think, I think that's what I would say is that stability is more important than the tax rate.
Totally
of course, the tax rate has to be reasonable,
Yeah.
It has to make sense economically.
You want a reduction of the withholding tax rate, I know.
yes, reduce the withholding
Something
tax.
that you can propose here, so maybe that would be great.
Yeah, because like the corporate rate.
That's what you will get if you do the capital gains tax, in a way.
Yeah.
The corporate rate is reducing from 27 to 23, which is really great at the asset level. But as a foreign investor, what you want to see is the cash that you get after it's been distributed out. But if the withholding tax still remains at 35, you're going to be paying the difference in your withholding tax. So it really doesn't make that much of a difference. I guess it just pushes the cash back maybe further down, and you may have more cash to reinvest in the country. But as an overall tax reduction, it's not a real tax reduction for a foreign investor.
To keep on a schedule, what do you think, and maybe each one of you can give us a response, What should be the watch item for investors in the discussion in Congress? I mean, what they should be looking at on the discussion of this bill? Alex, Astrid.
Yeah, no, I think it's, well, at the beginning I said thank you for having us in the discussion. I think it's important to have all the sectors in the discussion, but also tax experts or tax advisors to show how in all these measures interplay and to propose some other ideas maybe, okay? Everything we understand is a negotiation, but it's good to know how to have people that knows what Theresa is saying, basically what is in the financial models, for example, to see financial models. Because when you have a big project, when you invest in a 10-year, 20 years, and you change the rule, you destroy the financial model because you have a return expected, you know? So I think it's important that in this kind of tax reform, more that to see from a holistic point of view, you go to the detail, to the practice, okay? And not only to meet economists, okay, but tax experts and taxpayers and big companies that are investing in Chile, what they need. That is important, I think.
You know, I think we have to watch out in the negotiation that is coming up, what compensation will end up being agreed, because it looks like the government is pushing for this tax reform that basically relies a lot on reducing expenditures by the government and increasing the amount of tax revenue by more economic activity, and the left-wing parties are more focused on trying to compensate the lost revenue from the reductions of taxes with something else. And I think my guess is there's going to be some negotiation there, and that there will be some form of compensation agreed, or either that or parts of the bill will be eliminated or reduced. So, for instance, like the reintegration to me, in the focus of trying to encourage investment, I'm not sure that's a key item, for instance. But I think that we have to be watching for what compensations will end up happening, because I think that in the end you want to have a tax reform that has a broad base of approval. So even if the government thinks that they can push through the tax reform without the votes of the major opposition parties, I'm not sure that's a good idea. Because stability is the most important part of a tax regime, I think it's important as a sign of stability that hopefully this reform gets approved by a large majority. And for that to happen, there will be some agreement on compensations. And that's really what I would be focusing on in the coming weeks.
Okay. Theresa, anything?
No, I agree. I think it's really how it will eventually pass, right? Especially with the tax invariability. Like they're not carving things out or having compromises. And I think, I guess we'll have to watch. And I think that's something that we need to watch.
So, trying to wrap up, and if we were to have some key takeaways, I would say that first, this bill is not only about rates, it's about confidence, stability on the system, right? Mm-hmm. Secondly, the outcome, as Alex mentioned, I agree with you, will depend heavily on details. So in taxes, direction is important, but the game sometimes it plays in details. So I think it's important to how we implement this, and the role of the tax authorities, I believe it's key in that sense. And finally, for investors, the key point is long-term consistency. I mean, whether we create a system that provides confidence and has fewer surprises. So that's the idea. So thank you very much, everyone, for the time, for the great conversation, and see you on the next panel with my friend Pato Cofreja that has a very interesting tech.
Thank you. Thank you very much.
Thank you very much.